This is an important measure to help make life more affordable. We know that monthly transit costs eat into the bottom line for families. It is a significant cost for people who depend on public transit to get to and from work or to and from school. This is an important measure that is going to save a family of four who regularly use the TTC across the GTA almost $1,000 a year. That's significant.
Conservative leader Andrew Scheer is vowing to bring back the public transit tax credit that was scrapped by the Liberal government. Scheer says the plan, which allows riders to claim up to 15% of what they spent on transit passes, would save a family of four that commutes regularly on public transit in the Greater Toronto area nearly $1,000 a year, as you heard there. But is it tempting enough to boost transit use and have a real impact on greenhouse gas emissions? Nicholas Rivers is an associate professor at the Graduate School of Public and International Affairs with the University of Ottawa. Hi, Professor Rivers. Nice to see you. Thanks for your time today.
Hi, thanks very much for having me.
So back in 2016, you co-authored a study that assessed the effectiveness of the public transit tax credit originally introduced by the former Tory government back in 2006. Can you help us understand what some of the major conclusions you drew were?
Yeah, so we were trying to understand what the effectiveness of the public transit tax credit was in terms of increasing transit ridership, but also in terms of reducing greenhouse gas emissions, since that was one of its stated goals. And we found that the policy increased transit ridership very slightly. So amongst Canadians, transit ridership is about 12%, so about 12% of us regularly take transit to work. And the tax credit increased that by about 0.3 percentage points. So it went from about 12 points to about 12.3 percentage points. We then used those estimates of the effect of the policy to try to say something about how cost effective it was, because this policy requires an expenditure of government resources. And so we tried to figure out how much it costs government in terms of foregone revenue to increase transit ridership. And our calculations showed that it cost about $3,500 in foregone government revenue to cause one more person to take public transit. And so that was quite an expensive policy in that dimension. We also tried to evaluate the environmental cost effectiveness, like how much does it cost government to achieve greenhouse gas reductions using this policy? And we found that to reduce greenhouse gas emissions by 1 ton, it cost government about $1,000 in revenue, in foregone revenue. And so that's not a really easy number to interpret, $1,000.
How does that compare, I guess, to other measures? Yeah.
Yeah, so it's at the high end. So, and really at the extreme high end. So the policy that the federal government has brought in this year is a carbon levy, or this carbon pricing system of $20 per ton. So it's pursuing emissions reductions at the cost of around $20 per ton. And so this policy is around 50 times more expensive than that policy as a kind of way to benchmark the cost. And so it's really an effective, not that cost effective a policy for reducing greenhouse gas emissions, and it's an expensive policy for increasing transit ridership as well. So our conclusion was that this policy did have a small but measurable impact on transit ridership, about 0.3 percentage points, like I say, but that outcome was achieved at a pretty high cost.
Is there any discernible difference between what was announced, the promise that was announced today, and the policy that you examined from 2006?
No, I don't think all the details are out yet, but my reading of the policy is exactly the same. One of the things that I haven't mentioned yet is that this policy is a non-refundable tax credit. And I think that's an important thing to think about. And this is jargon, meaning that only people who pay income tax can avail themselves of this policy. It only benefits people who pay income tax. And so it's an income tax deduction, basically. If you don't owe any income tax, you don't benefit from this policy. And so I think that's an important characteristic of the policy, because it means that it really targets people at the higher ends of the income distribution, because those are the people that owe income tax, and it doesn't have any benefit for people who don't pay income tax. And people at the lower end of the income distribution.
Right, and I would imagine, and I'm sure you have a more factual basis for it, but that a number of people who do use public transit are on the lower income scale of things.
Yeah, absolutely, yeah. I don't have numbers for you, but I think that's absolutely right.
So let me ask you then, if the goal is to increase transit ridership, it's an understandable goal. I would imagine that other parties share that goal for a myriad of reasons. What kind of policies best do that?
Right. So I think that, there's several goals here. I think the policy was aimed at reducing congestion, reducing air pollution, reducing greenhouse gas pollution, and increasing transit ridership. And so I think there's a number of policies that would do that well. If we're looking strictly at increasing transit ridership, I think increasing transit service is probably the most effective way to go about that. If we're looking at policies that reduce congestion and reduce pollution, I think the evidence shows that either a regulatory or a pricing-based approach is the most effective way at producing reductions in congestion or reductions in greenhouse gas emissions or air pollution emissions. And so, there's a number of jurisdictions around the world that are experimenting with congestion pricing. Stockholm, Singapore, some cities in Italy. New York recently announced that it's planning on investigating and implementing congestion pricing. And in those cities that have implemented congestion pricing, we've seen falls in congestion in the city center, just as the policy targets. On emissions reductions, if we're trying to reduce emissions, which is one of the stated goals of this policy, I think that really the evidence shows that either regulations that prohibit emissions-producing activities or improve technology, or else the imposition of prices which make polluting more expensive, are a far more cost-effective way to reduce emissions than this type of approach.
Okay, I'll leave it there. Thank you very much, Professor Rivers. I appreciate your time this afternoon.
Thanks for having me.
Hi, I'm Vashi Capellos, host of Power in Politics. See more of our show by subscribing to the CBC News channel or click the link for another video. Thanks for watching.